All right, we should be live here. Let's see. Yeah, I think we're live. So, hello, can you hear me? I think we can hear me. So, let's share the screen and kind of get into it. Select a tab to share. Tab, entire screen over here. Yep. So we're sharing screen 2 here. We got a couple tabs open, so I'm gonna just sort of jump around a little bit. Let me see if I can send this link real quick. This isn't easy here. Maybe this button. Not that. Oh, yeah, that would do it. Let's see if that worked. I just sent this to close. See if Jack clicks on it. All right. So back to what we were doing, I guess. See if anyone wants to come play. Probably not. It's fine though. So, I guess this kind of, let's take a look at this. First quarter, so that's the last quarter we have. I kind of want to see that, but let's start by taking a look at some numbers. Right. So we have these statement and changes of beneficial ownership. So that's generally someone insider buying or selling. So that's what this is. The site will show you kind of buying and selling. Oops. It's not great. Jesus Christ. So it's kind of interesting. Generally, right, if you look up a company like, Apple, for example, do you think there's going to be a lot of buying, a lot of selling? All right, doesn't even come up. AAPL. A lot of selling, generally. The yellow is option exercises, basically sales, right? Because employees are paid in stock. If we look at Meta, it's a great example. You can see Zuckerberg basically sells every day. So buying is a good signal because, there's the old saying, executives buy stock, or the executives will sell stock for a lot of reasons, right? They think the company's going to do poorly in the future, could be one of them, but it could also be things like they need to buy a house or a yacht or, pay legal fees, whatever executives tend to get up to. So to see buying is interesting. Now, the sort of thing you have to be aware of is executives know that the market perceives executive buying well, right? And so you have to sort of try and discern what buying is being done because executives are really bullish on the future of the company and what's being done to get the stock to go up, to get other people excited. And so this, at first glance, looks pretty exciting because there's lots of different people. But I think looking at the value is important. So, like, for example, Tim Proctor, we can kind of see what he's done. He bought the stock at $3 a share, and then he's been buying it at, cheaper, 27th, 29th. I like that. I mean, this to me shows he wanted to buy 60,000 worth of stock roughly, and because of the size of this company, right? I mean, if we look at this VWE, 27 million market cap. What's the volume, right? How much is actually traded in a day, right? If 220,000 shares are traded on average, and you're trying to buy, 37,000 shares, that's about all you're going to be able to do in a day. So I like to see that, that's actually not as bad. Bigger company, right? That small of an order would kind of be a little ridiculous, right? It more sort of trigger it, but it looks like there's actually real buying. And then here we go, executive chairman of the board, 10% holder, buying last year. So I don't think there can be buying this year because they have earnings coming out. This is actually looking kind of interesting to me. So let's kind of dig in a little bit here. So we got a little sidetracked, but what we're looking for here is a last earnings statement, right? Last 10Q is what it's called. And so that was in November. They had it. So should be able to find it somewhere. Here we go, 10Q. So let's just take a quick peek at the balance sheet, right? Because this is really for a company that is, oh, hi, got a viewer here. I love that. For a company that's sort of trading as cheaply as this one is, right, there's serious risk about bankruptcy and about debt, right? Because in this letter they sent out, where is it? It's on a different page. But yeah, in the letter they sent out saying they're going to look at selling assets. Kind of want to see what they have on the books and what they may get for it, right? So just taking a quick look, 20 million in cash, 30 million in accounts receivable. That's basically cash, right? Inventory, that's not cash, right? Inventory is not quickly converted into cash, but still call it some bit of that. Current assets, 265, and then this is all the property, plant, equipment. What's kind of interesting is these are recorded on the balance sheet at cost, right? And so for a business like, what's an example? An airline company, right? If you own a plane and you're recorded at cost, each year the value of that plane may decrease, right? But this is a vineyard, like a winery. So some of these assets, right, could be real estate. And real estate tends to increase in value over time, especially beautiful, California real estate. So we need to kind of dig in a little deeper on, well, what's that worth, right? And then they lease some of their properties, and I don't know what they're doing here. But anyway, cool. 500 million in assets. Some of that is things like, where's goodwill on here? Anywhere? I don't know. Anyway, let's go to liabilities. So they owe this on the line of credit. They owe, all this money is owed, right? And then long-term debt, right? So current liabilities, 193 million, and then 170 in long-term debt. So they owe this money, right? This 397 is owed. And then they have this preferred. Do they have preferred stock, or is it gone? None issued, so no preferred. So what's going on with the actual business, right? 52 million in wine, 20 million outside. Amazing. It's really not growing. It's shrinking in terms of this, but whatever. That's fine. What's the cost of that? All right. So gross profit of 24 million. This line, right? We want to see this. This has to shrink. It has to, right? They can't. They have to decrease that as an expense. Amortization expense, right? And yeah, at the end of the day, they're losing 15 million. But let's take a look at the statement of operations here. And hello, I have another viewer. Pretty good. Time to learn. So what you do here is you basically look at what the net income number was from the income statement, right? So if we go back, we can see this income statement starts with what do we make, then what are we spending, what's our costs, what are our other costs, and then we get down to this net number. So we'll come here, and what happens on the cash flow statement is we actually look at cash changes to the company, not just what happened in the accrual accounting. So you can see, even though they lost 15 million on paper, the actual decrease in their cash balance was only 4 million, right? And so that is what it is. The question, I think, with this company, right, is, I guess what's interesting here, just to give you a little context, is if we look at the market cap of this business, and just ask me any questions if you have any. Basically $27 million, right, is the total value. You could buy the whole business for 27 million in theory, right? And what these guys do, Vintage Wine, is they own a bunch of vineyards. And so if you look at their, right, they have properties, like all these different brands they own. They own this Ace Cider, which actually I saw has decent distribution. They sell it in Rhode Island. Also saw it for sale in Utah, which is kind of cool. But it's kind of shitty. It's 150 calories, which is kind of high, and they print it on there. I don't know why they print it on there, but they do. So trying to see some of the other things they own. They have some brands, and some of the places they actually own the vineyards, right? So for 27 million, you actually are owning some real estate, which is probably worth hundreds of millions of dollars. And so the question you might ask is, well, that sounds like a pretty good deal. Why is it so cheap? And it's because when you buy the whole business for 27 million, you're buying all the assets. So you get the cash, you get the inventory, you get the property, plant, and equipment, the real estate, but you also owe all the liabilities, right? And so you owe 120 million in credit, right? You're basically assuming the credit card debt, and then you're assuming this other debt, long-term liabilities. And so we can look at basically what that is. But what's going on with the business recently, right? If we take a look at this income statement we were just looking at, right? Take a look at these losses, right? They're selling $73 million worth of stuff, and they're spending, about 83 million or whatever. Where is it? Yeah, they're spending more than they're making to sell the stuff. So they're selling $100, and they are, making 100 million from the sales, and then they have to spend 110 million to sell it. So that's kind of a tough business, right? If you're losing money. So the question is, all right, if we want to invest in this, how could they turn this around, right? And so that's where they put out a recent, if you go to the news, every website, every business, if you Google the business and then you Google investment relations, it'll pop up and you'll get to this sort of page that I'm on. So where is it? News, right? So this is pretty heinous. This is basically each quarter you have to post a 10Q, a quarterly financial statement with the SEC and with, I guess, NASDAQ here. And so this is basically a complaint or a message from the NASDAQ, right? The market it's listed on, saying, you didn't file this thing. You were supposed to. This is like egregious, right? Like, you're a publicly traded company. This is, everyone knows this is how it has to go. So to not do this is kind of ridiculous. It shows that it's a mess, right? Would be my guess in the management. But anyway, they have to do this within 60 days, whatever, that's fine. But what I liked was this most recent thing, basically saying Vintage Wine Estates restructures organization. So what does that mean, right? Initiates cost cuts, simplifies business model. So it's kind of cool. Like, we can look at the business and then we can look at their sheets, their financials, and say, what's going on here, right? We know it's bad. We're looking and we're saying, all right, they were making money. Now they're losing money. Something needs to change. And so that's kind of what this letter is. Markets move slowly. So, like, you may realize these things before the market does, right? And that's kind of the goal. But so what are they doing here? Let's take a look. So, one of the top wine producers in the US announced a restructuring, and they're going to exit non-core, lower product and service offerings, right? So basically they're going to be selling off businesses that don't make a lot of money, right? So what's an example of a high margin business? Might be maybe their luxury wine, right? Their costs of producing that bottle of wine are not that high relative to what they can charge for the bottle. Whereas maybe a low margin business is one of the wine businesses that's losing money, right? They're selling a cheap wine and they're having to pay a lot for marketing and distribution, and they're not able to earn enough. So exit non-core, lower margin product service offerings. So revenue will decrease, but if you're paying more to, get that revenue, then you might end up ahead, which would be good. And then the company will be reducing its workforce by approximately 15% for annualized savings of 7.1 million. So that's good. If we go over to this sheet here, we can see, all right, next year, our selling, general, and administrative costs are going to be lower by 7 million. And you have to remember, this is quarterly, so you got to divide it by 4. But basically what's going to happen here is, you take 7 million and let's call it 6, because I just feel like these things are usually overestimated and other wages rise and whatnot. But if you call it 6 and you do 1.5 million, you're decreasing this cost, right, by 1.5 million. So that's a start. Restructuring charges. So this is a one-time cost. It's going to cost $1.5 million to fire these people. And then what else is going on here? Seth Kaufman, President Chief Executive, said the complexity of our business has resulted in a disproportionately high cost base. So it's interesting to think about why this may be, right? When you have a complex business, you probably have maybe lots of people that are kind of specialized in their one line of business working, and maybe not at their full capacity, but just sort of punching in, punching out, and expert in what they're doing. Oh yeah, notes. I don't have any notes. Show us your notes, if any, for those just joining. Thank you. But no notes here. We're just kind of going off the cuff, but looking at different businesses and trying to just kind of understand what's going on and if there may be some opportunities in any of these. But, just taking a peek. The benefit of looking at these sort of small, lousier companies compared to like an Apple or a Google or whatever is that they're so small that big institutions can't touch them, right? So if you're a hedge fund or a big fund and you have $100 million you're managing, or maybe more than that, $1 billion, and you want to put 50 million in every idea, you can't put 50 million in this. You probably can't even put like 5 million in this because that's 20% of the business. So the question is, what sticks out the most so far? With Vintage Wine Estates, right? We can look at the trajectory of this business. So it did a SPAC in 2020, 2021, where it came on the public markets at a very high valuation. Insiders probably made a ton of money and cashed out. And this basically has gone down, just basically straight into the ground. And the question is, well, what's going to happen to this thing, right? Like, is this going to literally go, and then all of a sudden they're going to say, our business is terrible, we're out of money, we're going bankrupt, it's not worth 46 cents, it's worth nothing, right? Because when you go bankrupt, what happens is, simplistically, we go look at the balance sheet and they say, all right, what are your assets? And if you say, well, we have 500 million, but we had to do fire sale and sell, most of it, so we only got 300. And then they say, well, what are your total liabilities? And you say, well, we owe, right? Assets are what you own, liabilities are what you owe. We owe 400 million, but we only have 3. And basically, these people get paid before we do. If there's any leftover money, we might get paid. So the question here is this thing going to zero or not? And that's kind of what I'm interested in trying to figure out, right? It's kind of how do you figure that out? So a couple things I'm looking at are, what we're really going to have to dig into, honestly, because if we look at, and we should probably just skip all the foreplay and just get into it. This business is not like some, brilliant turnaround business where they're going to all of a sudden become an incredible operating company, right? Keyword operating. Operating means selling something, making a profit. That's not really the play here. They may do that. I wish them luck. But when you look at what they're selling, they're selling wine and spirits. Everyone's selling wine and spirits. So unless they get really lucky, something goes viral, they're able to, whatever, that shit happens and it's cool and it's great. And yeah, maybe they make the next best seltzer, but I don't know. Let's not bank on that. What we want to look at here is, what are the actual values of these assets? Because liabilities are pretty straightforward. If I owe you $1 or $15,000, that's what I owe you, right? It doesn't change. Whereas the asset values can change. The cash won't change, but the inventories will change, right? Is 200 million of inventory worth $200 million? Or is it worth more or less depending on how fast you have to sell it? But what I really want to look at here is property, plant, and equipment, because that's the real estate side of the business. So I think we're actually going to make a little Excel sheet. I don't know if I can do this. Let's see here. Open options. I don't even know how to open this, keep it on here. So we'll wait. But what we want to look at is, what do they actually own, right? And then the other part of this letter, cap rate. Yeah, so cap rate is a way we might talk about commercial real estate. What about cap rate? I'm going to go back over here because I want to see this statement. So this is the most, in terms of news, right? What is the company saying?
Well, the first thing is they, were late to file their financials. So, and then they have a new marketing officer, and they posted it twice because this is just like amateur hour. So who's this guy, right? Why do we need a chief marketing officer? 20 years of experience. Yeah, so I think that's probably his goal, is to try and build a good brand. We're thrilled to welcome Ryan. Lead some efforts, significant contributor, measurably simplify the business and our business model, right? That's the trend here. They're trying to become a little bit more simple. Significant knowledge and data-driven analysis, right? Look at, what makes money, and then do more of that. Seems easy enough. We are making progress with our 5-point plan as we look to reduce costs. What do we think of Ryan here, chat? What's the, is this guy a winner? Is he going to really turn this thing around? Is he not? So he was at BCG. Partner focus on digital growth and marketing. And then VW is diverse across price points and verticals, brands ranging from $10 to $150 at retail. It's primary focus on the fast growing luxury segments. We like that. Something a little more expensive. Yeah, 10 to 20. So great. They hired this guy, but really what I was looking at is this last thing. Them talking about what they're doing. And this is the part I really liked. So you said, what sticks out to you the most? Well, what sticks out to me the most is they're hired an investment bank to come in and sell some shit, right? This looks like Scott from Entourage. I don't know. We'll focus on the assets, right? Because marketing guy, we wish him luck, but really we want to figure out, all right, Oppenheimer's in here, right? Who is Oppenheimer and Co? What do they do? And they are an investment bank, and they're going to come in and, they do wealth management, investment banking. So what are they doing here, right? Expertise, transactions. What kind of transactions do these guys do? They're helping these guys do this stuff, whatever. I think they do private equity too. And that's actually kind of what, this is their. So we need, let's read this here. The complexity of our business has resulted in disproportionately high cost base. To drive margin improvement and generate cash, we need to simplify beyond our product offerings and fundamentally reconstruct our business model. I like that, right? Because what they're doing now isn't working. So it's frustrating sometimes to see management just keep doing what's not working. And you say, God, how could they do that? And the how is because they get paid to clock in and clock out and just keep it going. So what we'll look at later is how Seth Kaufman, right, is incentivized. How is he getting paid? And is his pay at all aligned with my interests as a common shareholder? So let's get through this. To drive margin improvement, generate cash, we need to simplify beyond our product offerings and fundamentally reconstruct our business model. Getting from here to there starts by recognizing where our strengths lie and identifying the areas of the business in which we shouldn't operate. The processes and requirements for estate wineries and winemaking production services and other custom crush offerings in several of our independent direct-to-consumer operations are very dissimilar and require different capabilities. The actions we are taking now are the initial steps to streamlining our business model and operations as we develop a long-term strategy for building a select portfolio of nationally recognized brands. There's always better interests than the shareholder. Mismanagement 101. Always better. What do you mean by that? Always a better interest. It's always a better interest than the shareholder. So yeah, there can be competing interests, and we got to be wary of those, right? But this is kind of what I'm looking at. They're saying we have a bunch of different businesses here, and they have different skills. So we're going to try and exit them. We need the resources to execute our plan and have engaged Oppenheimer & Co. to accelerate our efforts to monetize certain assets. So what that means, bing, 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 that means they're about to go sell some shit, right? And that excites me because right now this is kind of a mess, right? They don't actually have $500 million in cash. What they really have is, maybe half that. I mean, I don't even want to talk about inventory. They have like 50 million in cash. And then they have this shit that's, property, plant, equipment, real estate. Well, we don't know what that's really worth because this is held on here at cost, I believe. And that's something we got to look into is what they paid for it. So if they bought a vineyard 30 years ago for $5 million, it could be worth 50 today. And that's not recognized on here. And so when that gets sold and turned into cash and they use that to pay down debt, the market will like that, right? The market will like them selling off non-core businesses, things that aren't actually generating money, or worse, are costing the company money. Over up top on this sheet. Oops, where is it? Right, stuff that costs money and doesn't generate good revenue. If that gets sold and generates more than the market thinks, the stock will go up, right? And just the fact that they sell something and get shit done, the stock will probably like that. Another thing to look at is, what's it called? Yellow. So this was an example. This was an example of a company. Wow, look at that. It looked like it was going bankrupt, right? If we look at this Max thing, it was a less than truckload shipping company. Over the last year, and this was over the summer, I remember this, went down to 57 cents, right? And what happened was a hedge fund started buying massive chunks of this company and said, yes, it looks like it's going into bankruptcy, but their assets, their truck terminals, are worth more than they're logged on the paper, and they're going to end up, being able to sell those and kind of get out of it. And that's what's happened here. So I guess I saw this play out, and I'm kind of trying to figure out if the same thing is possible here. I actually was looking at this stock over the summer, and what I'm trying, and maybe I was a little too soon. It was like 80 cents, right? So if I liked it at 50 million, I certainly like it at 27. So that's where, we want to keep looking. But all right, so we're going to sell more assets we don't need as part of the reimagined VWE. These include select luxury estates, right? So, I mean, if we were really getting into this, we'd probably write this down, right? And figure out, okay, what are those? Biz closed, all sold off. What closed, all sold off? Yeah, I know, right? I mean, I love that. Good question. That's kind of what I feel like would be a better option, right? Like, and this is what a lot of corporate raiders did in the 1980s is they found a company that was worth more dead than alive and would go in, right? And I actually looked at GameStop like this back in 2019, 2020, where I was like, if you just bought this business for what it's worth, right? 100 million, fired everybody, sold everything, paid the debts, you would have more than 100 million, right? So that's a question and something worth looking at is if we fired everyone, right? If we fired every single person here, and we shut it down and we sold everything, could we get more money than the liabilities? And if so, is it more than 27 million, right? Because if we own 100% of the shares for 27 million, we sell everything and have 100 million left, well, then we get to take the 100 million. So we 4x our money. And the reason this doesn't actually happen that much is complicated, but really it's a lot harder to buy 100% of a business. There's all these like rules and stuff. And two, generally, a lot of these businesses are run by people and management who want to keep their jobs. And so what they'll argue is it's not in the best interests of shareholders to do that. You could make 100 million one time, or we're building this great, business here with these luxury brands. And in 5 years, we're going to be doing 100 million a year. Right. And so you get into the short-term versus long-term thinking and bird in the hand versus two in the bush. And really it's management's job, right? I don't want to really talk about in practice because in practice, it's a bit sad. It doesn't happen as much as it should, I think. But in theory, it's management's job to evaluate that. And if that means firing everyone, including themselves, they're supposed to do what's in the best interests of shareholders, right? They're held to that standard. All right. So I'm gonna run to the bathroom real quick, but just keep reading this and then we'll get back into it if there's anyone still here. All right. Any learnings from that while I was away here? I've heard of Layer Cake. Yeah, I think that's one of their brands actually. Let's see. It's all right. Yeah, I mean, I think that's good. I think a lot of their shit's all right. They have, I think they actually have a couple decent brands, right? This Clo Pega, like if they own this shit, right? Like this is what their portfolio is. So sometimes they don't actually own the vineyard, right? The branding is different than the vineyard or like the actual real estate. What's a top bottle? Ace Cider? Or on here? This shit? I don't know. Let's see. Wine shop. Look at that. Let's get in here. On there. What's the top bottle on there? Like the most expensive or the best? I mean, I don't know really, but we could take a look. I mean, their portfolio. I think this is a pretty nice vineyard. Here's Layer Cake. So yeah, I think I've seen that around. Like they actually have decent distribution on a lot of the stuff. Like Ace Cider. I don't know if you have these where you are, but yes, chat is delayed. What's the top bottle? Ace Cider is, they had this in Utah when I was there, but what's the nicest thing? I don't know. Bar Dog. That's cute. Like they own a lot of wine. I don't know. Sonoma Coast Vineyards. That sounds nice. Ooh. I'm not sure what the most expensive wine here is. That's a good question. Yeah, Layer Cake is solid coverage. Wine Sisterhood. I mean, whatever, right? They own a lot of wine. The question really, I think, is what real estate do they own? That's kind of where I'd get excited is, do they have any like really nice real estate in a good location that someone else might want to buy? I think they own BR Cone actually, but let's try and figure that out. And this is the other thing I liked. I was talking about a little bit. This is insider buying. So it's nice to see like these guys are actually buying a little bit of stock, not a lot, but a little bit of stock, but like better, like super solid house. Yeah. I think like a lot of this, like that, yeah, 10 to 20 range. That's kind of what they're saying. They want to be in a little bit more, right? They're saying, so yeah, let's see. Restructuring. So the company plans to simplify, yada, yada, wind down certain custom crush and B2B services. I kind of like that, right? They're saying we're going to be more of like a consumer facing company and yeah, no more B2B. Like, I kind of like that. Like they were doing a lot of like, you could hire them to crush the grapes and then, you did not their brand, but I don't know. I like simplifying the business. Let's see what else we have here. Priority brands will include a number of super premium estate brands and the select lifestyle brands of Layer Cake. So they like this. They like Layer Cake, Bar Dog, Cherry Pie, right? All the ones we've heard of, the good ones. Ace, Super premium estate brands will include, so I think estate means they own it. Probably sell more to businesses than distributors or consumer purchases. Yeah, I think the B2B actually is a little bit, yeah, restaurant sales would be great. I think the B2B is actually more like B2B services, right? So that's them like offering to crush grapes, right? That's not so much selling bottles to other businesses. They're trying to do more of that. I think they're trying to wind down this. So that's nice. And then Mr. Kaufman noted, we expect the intense focus of our resources will enable us to create stronger brand desirability that can be leveraged to drive greater wholesale throughput across on-premise retail, creating marketing discipline. So like, that's a lot of fucking words. So what we could do, we could try this. Just see like maybe GPT, what does that mean? I don't know. Yeah, something like that, right? I don't know. So, but GPT is a great tool for when you're reading through these and you might not know what, you know, intangible assets are, or interest rate swap. That can help you kind of figure this out. Mr. Kaufman concluded by saying, as we reimagine VWE to become an omni-channel wine and cider company that offers the highest quality, super premium plus. I don't know. It's something about the plus there just doesn't seem super premium, but we expect this transition to result in a smaller company, but one that can grow sustainably while generating top quartile industry margins. We are taking immediate action now to move. So yeah, that's nice. Immediate action now, immediate and now. It's sort of double overstated, but to move towards this vision as we advance our strategy, continue to communicate our efforts and progress. So we love that, right? As shareholders, they're going to change things up and they're going to communicate with us. They're going to tell us what they're doing. So let's read this real quick. This is just a blurb about them, and it might give us some more insight on what properties they own. But that's the next thing I think I want to get into is what's the realist? What do they actually own here? So let's read this. It's good real estate. Wow. All right, this helps. Ace Cider, Bar Dog Cherry Pie Layer Cake, and Key Estate Wines, including, so I think Estate Wines is they are producing. So they own B.R. Cohn, Firesteed, Gerard, Kund, and Letitia. Gerard. I think Gerard is a nice wine. Let's take a look at that. I think Gerard is a nice bottle. Wine shop. Oh, actually, this might be how we can figure it out. If we go to the wine shop, we might be able to sort by, so here's Gerard. So yeah, I mean, look at that. This is classic Napa cab, right? $100 basically, nothing crazy. But still, that's a premium wine, right? 92 points. That's nice. And I believe, so Visit, when do you think the prospective Costco has on, what do you think the prospective Costco has on a company like this? What do you mean perspective? Like selling their wines, or are you talking about comparing Costco as a business to this business? Lots of them priced wines. I don't know what you mean. Lets them. So can we visit, right? Should we visit? This looks nice. Could do a tasting. So here's, Gerard Winery, right? This is one of the wineries. I believe VW owns it. I mean, can you Zillow this thing? Right? Like, is that a thing? Just try and get a. They could use this for their wine. Who could use it? All of it. They could use this for their wine. They could use what for their wine? So It's already in the Costco price range. Oh, I see. Could they sell into Costco? Maybe. Selling into Costco, I mean, it's great because you get to sell lots of stuff at once, but it's not great because your suppliers, right? Costco is extremely cost disciplined. So they're going to squeeze every fucking penny they can out of you, and they're Costco. So they have leverage to kind of do it. And, you know, they say they like treat their suppliers with respect. And I'm sure that's true, but yeah, I don't know if they could make enough. The issue with Costco too is a lot of volume, right? So they have to be one of the volume players. I don't know. So back in here though, get out of this. We don't need to look at the equity anymore. This is Gerard. I don't think Gerard's as nice as I thought. I'm trying to find, there was one that was, what are the other ones? BR Cone, Firesteed. I'd like to see go back to the Firesteed sellers. Ooh. Yeah, look at that. Oh, I would love a glass. Fuck, Pinot. I could go for a Pinot right now. Maybe I'll open one. Visit wine shop. Wow, that looks like, I mean, I would, yeah, beautiful. $50 Pinot. Why not, man? Why not? So yeah, Firesteed. What's the other one? BR Cone, Kunde? BCEFG, Kunde. I really want a Syrah. Yeah, I think Syrah, very gamey. I had 2 glasses of wine last night. I had a Pinot with dinner and then a Nebbiolo after. This looks nice. Like, look at that. If they own that, like, that'd be nice. If, right? I don't know. I think they own Kund, but the issue is they're not selling it. Look at that. $38. Cab, Sonoma. Waves of rich tannins play across the palate with black cherry coffee flavors that linger in the wine's well-structured finish. So they have some decent brands for sure. And I kind of like the idea of, it's like everything we're doing with all these other brands, right? Where's that page? All this other stuff, like let's whittle this down. Check the property tax to get an idea of total value. So I think the first thing we got to do is actually figure out which vineyards they own. And I'm kind of putting it off as a pain in the ass, but let's go into their annual reports. That's where they should have everything, including I think they've done an S1. I don't think so because they didn't go public, but the registration statements. So they might have, no. Oh God, what's this? So selling more stock. All right, not that. Let's go back and take a look at the annual filings. Because we don't know where the vineyards are yet, but I agree. Trying to figure out a value of what they're about to sell is huge, right? If we could figure out, all right, they're about to sell 500 million of assets, that would put them in a very good operating position to basically do what they say they want to do, which is just sell nice wine, and not be so focused on all this other crap. And not to mention, like, I want to show you, like, I've actually looked at this business a little bit before. So, but do they sell it all? No, they won't sell it all. They said they're going to keep the good stuff. They're going to keep the good stuff. They're going to keep Kund, right? That's what it says in here. Fuck, I got so much shit open. I was looking at Blade earlier. Let me know if you want to switch over to Blade at any point. Blade's kind of interesting, but 10 times bigger company. So where was it? Where were we? I want not this. I want the news and a restructure thing. So this is what they said they're keeping. So they said down here. Well, no, right here. The company plans to simplify, right? They're going to make it simpler. They're going to get out of these other businesses and they're going to keep Layer Cake, Bar Dog, Cherry Pie, Ace. The super premium priority will be Gerard Kund. They're keeping these and some others. So they're going to try and focus. So we get that, right? We kind of get what's going on there. What I wanted to show you was because they had some plan recently. Let's go back to last year news. So they had a new president of operations. Like, this kind of, there's stuff happening here, but slowly.
This is what I want to look at. Fourth quarter, that's what I'm already looking at. New president, CEO completes first week, right? New CEO. This was their last earnings. And then credit agreement, they change, right? They have financing. We're trying to find is business update. So they kind of provided this like business update not too long ago, which I think was kind of a punt before they sold. They said what they're doing now, which is selling stuff. Here they basically said, we're going to simplify the business by reducing the number of things we're selling, optimizing the warehouse, improving fulfillment, execution, and better accountability, productivity, expected drive, So they're like, we're going to just simplify things, but it really wasn't enough. 5 points, which include margin expansion through simplification, better execution, cost reduction, disciplined cash management. So yeah, monetizing assets. I guess the plan did include this, and reducing debt and growing revenue. So that's like business 101, right? Every company should be doing all of this. Make more money on the stuff you're selling. That's margin expansion. Better execution. Just do fucking better. Measurable cost reduction, right? Reduce the cost, right? This is a lot of word speak. Disciplined cash management. Manage the money better. Monetizing assets. Selling stuff like real estate. Paying off your debt. And then growing revenue in its key brands. So I guess that was the plan. They eliminated half of what they did. They're making progress here. But it's interesting, right? They're saying they're making progress, but the market is saying they're not. Year to date, it's down 9%. 1 year, it's down 70%. So the market doesn't really like what's going on here. Anyway, we keep getting sidetracked. We got to get into the quarterly, the 10K annual reports. Let's see what they own. Let's take a look. And they should have some new stuff coming out soon. But we're getting into it. This is where we'll really learn. They tell you about the business a little bit here. So I don't want to have me block it. But anyway, this is what they got, right? VWE. So this is kind of interesting. This shows how their business was as a physical, whatever this date was. I forget what date this was. Let's see when they posted this. June 30, 23. What about telling a PE that just produces banger companies from an investment seat? For later, circle back to this. Oh, for later. What about telling a PE, private equity, that just produces banger companies from an investment seat? What about tailing, like following them around? Oh, no, wait. I'll pause for a sec, because I actually think this is an interesting point. You're talking about maybe finding someone who does a good job at doing basically what I'm trying to do here. And yeah, I should stay focused, but you can't distract me. I got to do what the audience wants. But yeah, following someone into deals, totally good idea. If you find someone that like has a process that you really believe in and is sort of, it's good to see, right? You'd rather see like smart people in it with you than not. Totally. So staying focused. Let's see. So this is interesting. Where's the money coming from? The revenue? A third is direct to consumer. So that's kind of cool. That's like selling online, tasting rooms, right? You go to the vineyard and you get a wine club. Cool. Wholesale. This is kind of what you were talking about, often on premise. Thank you. I appreciate it. This is, selling to businesses. So it's a third, and then B2B, private label, custom crush production services. And so one could make the argument that it's good to be diversified, right? You have 3 different businesses. And so if any one isn't doing well one year, another might do well the other. And that was kind of the logic behind having all these companies and all these different services. But I think what they found is it wasn't really working because this VWE bubble cost a lot. It's not cheap to run 3 different totally separate types of businesses. And so that's kind of what you see here on the income statement is, operations.
is you see these like kind of expensive, right? 3 million a year in selling general administrative expenses, right? So if you're bringing in 70 million and it costs you, right? Because this isn't software. You got to remember, we're not selling software. We're selling physical shit. We're selling wine. And so every time we do that, it costs money, right? Cost of revenue is 48 million. So whoa, we're making 73 and it costs us 48 to make that 73, right? So call it 50 and 70. It's like 20 million, 25 million in gross profit, right? And then right off the bat, our administrative costs to market, and then all the overhead, right? The lawyers, the accountants, the chief marketing guy that we kind of were unsure about, he costs money. All those people cost money. We're already losing money. So I think what the issue with this structure is, unless each piece has enough scale to actually, do well and enough margin, it's too expensive to be running these 3 different businesses. And maybe we want to focus on the one that's doing the best and sell the others. So I think that's kind of what they've come to. Board of directors, right? You could look into these people, say, is there anyone here, who's a big shot or someone, seems competent? I don't know. Salaries outweigh profits. Yeah, oftentimes these businesses, right? Like in America, businesses are run for the benefit of the shareholder, but sometimes what you find is they're kind of being run for the benefit of the employees and for the, not the, the management, right? The CEO making a lot of money. It's terrible. They shouldn't get paid if they don't deliver results. All right, let's take these off. Okay, so let's see what they own. Business. So what is the business? Every 10K ever, right, starts with this sort of, what do they do? Luxury wines. While we have approximately 40 brands, our key focus brands include Bardog, B.R. Cohn, Cameron Hughes. Oh, I remember they own Cameron Hughes. I love this guy. He basically buys grapes from vineyards that, have extra grapes, really nice vineyards, like a top shelf, sort of like, maybe what's Duckhorn has some extra grapes or something. And so he'll do these lots where he'll get really good grapes from somewhere.
Luke Slope. Really, this has red blend on it because there's a little bit more going on here than traditional wines from GSM regions.
Grenache, Syrah, Mourvedre, right? Or Mourvedre, something. So GSM. I don't know where he went. He was so funny, this guy, but I think he must have been totally ripped out of it, the founder. Because, yeah, sad. He used to make the funniest videos where he'd swirl around and spit and all this great stuff. But see what we do, right? So they actually own Cameron Hughes, and this is a great, founder-led business.
Time came to start my own company. I knew I had access through my connections to small lots of high-end wine that I could buy, bottle under my own label, and sell direct.
He's fucking awesome. I don't know what happened to him. I don't think he's with the company anymore, which is, a namesake. And then this guy is pissed. So
a wine trader, we have no winery, we have no vineyards, we have very little overhead, and that allows us to offer some of the best deals in the marketplace. I look through the millions of gallons of wine that are available. I pick out the needle in a haystack, and it's all.
I loved it. I mean, this guy's like a master marketer. And I would totally, this business probably going to get sold because it's sort of hidden. So this guy would buy up like big lots of grapes, find something really good from a top winery and promise not to tell what winery it was, but put his own label on it. So you can often find on his website, like, very expensive wine or like that, ostensibly very selected. Oh, look at all this crap, very expensive wine. And get it for cheap. So like, look at this. Let's see what they got. New releases, $16. You can get this 2021, Pinot, but this might be 70 or 80 in something else. I know I saw that SC. I thought I hit the R, but what happened to this guy? Cameron Hughes, About Us, blog, videos. He was so funny. Tasting panel. And they brought a new, so I guess what happened is he sold it to, he's not even on the thing anymore. I want to figure that out. You know, what happened to Cameron Hughes? Whoa. Oh, come on. Wait, no, it's probably not the same guy. Yeah, you're right, Reddit. Oh no, this is Uber. Oh, Jesus. All right, you gotta stay off the post. That's so different guy, right? Cameron Hughes wine. You said Reddit. What is up with Cameron Hughes these days? Okay, as Cameron Hughes, the company started to grow, more and more capital buy wine, a large amount of debt, and so eventually the banks that lend to the company money placed the company under receivership, ended up being sold to Vintage Wine Estates, right? So that there it is, and we could see Vintage Wine Estates go into bankruptcy and get sold to someone else for pennies, and so you know you got to look at that. At some point, part of the Cameron's contract determined he must stay there, can't compete. So he left and started a new venture called De Negoce. It is very similar, but instead of acquiring wines and selling them, they sell wine futures, selling not yet bottled wine for future delivery so as to not have similar cash flow problems that plagued his last venture. Awesome, right? I mean, this is what's so cool. You learn all this shit. And I love this guy, Cameron Hughes. I'm sure we'll see him somewhere on here because he just, yeah, there he is. Sounds like he got it a little. Oh, yeah. I mean, it sucks to start a company, put your name on it, and then lose it. Oh, my fucking God. This is annoying. See, look, this doesn't even work. I can't even get in here. So let's see. Future Shop, Bottle Shop, red wine. Yeah, so I guess he's still doing, he couldn't help himself. He's still selling wine. But no, I think he got gutted pretty bad, right? Because when you own the company and then it goes bankrupt, you owe all the debts. And so if you can't pay it, you may be fine, but the company's not. The shareholders aren't. Bottle Shop, how it works, Future Shop. I wonder if I'd love to see some videos of him because he was so good. But this looks like it's new because you click how it works and it brings you right to the 2 ways to shop, Bottle Shop. Show me a tasting. He used to do these tastings, which is hilarious. I was hoping I could find one. Kind of got me into it. I think I taste a little bit like he did. I'm bummed those videos are gone. Yeah, I don't know. I don't think he's tasting these anymore.
It's an incredible assortment. And it is all made possible by this early purchasing cycle, you know, because we can sell so much of the wine, cover the cost, and cash flow out the inventory in a way.
Yeah, so now he's an expert in not fucking running his ship into the ground again. So I love this guy. I was always a fan. I think but without him, I mean, what's his thing worth? Like he was the ultimate showman, salesman. He was incredible. And so, yeah, the fact that VWE now owns it, I mean, what's it really worth to the company if it's like you don't have the guy? But anyway, back to these brands. Cherry Pie, Fireseed Coon, many of which have achieved critical acclaim. VWE also produces hard cider, another form of wine under Ace Cider. I've had them. They're fine. They're whatever. Since our founding over 20 years ago, we have grown organically through brand creation as well as through acquisitions. The growth has enabled us to become the 14th largest wine producer based on cases of wine shipped. We sell over 2.2 million cases of wine through our direct-to-consumer and wholesale segments in the U.S. So they want to produce consistent. Our mission is to produce consistent quality in our luxury and lifestyle wines that are expressive and complex. Making me want a glass of wine. They respect the way people buy wine. 10 to 150. Here we go. Let's fucking get into this. We have a large asset base of These properties extend from the central coast of California to storied Appalachians in Napa Valley and Sonoma County, and north to Oregon and Washington. We obtain approximately half the fruit for our wines from these owned and leased vineyards, and use other sources, including independent growers. Let's see. Where was I? Spot Wine Market for the remaining supply. Facilities capacity to store over 10 million gallons. They make a lot of wine. Omni-channel, right? So what's the background of this business? 2000, this guy and his, passively partner, they bought Girard Winery. So they bought another vineyard, got into this space, 30 acquisitions. So they're kind of good at buying companies, I guess. I mean, how hard is it, right? It's like me being good at buying something on eBay, but if you're willing to pay, you can get what you want. So let's get back into, we got a second viewer here. Good evening. So this is the 5-point plan. We talked about this, how it's sort of basically what every business should try and do. But I want to learn more about the actual real estate. So let's get into that. So here, they'll go into depth on all these different segments too, if you want to kind of get into it. Tasting rooms, right? They're running 11 tasting rooms, 13 wine clubs, selling stuff online. And they've been doing it for a while. They're used to it. Strong core brand. So what do we got here? This is what they've been buying. They diversified with Ace, right? They saw the seltzer trend, kind of said, hey, maybe we got to get into this. So they got good DEI efforts, right? That's important. Let's see. Employees. So got to get the, YouTube monetization, right? Let's see. So risks. This is good. You can read this. This is in every 10K, right? You read about what the risks are to the business. We'll figure that out. But what we want to look for is the real estate. And where was that? That was more up here. So I guess it's probably property, right? We'll look for property. Oops, I got sales spelled out. Property. So what do they got here? So, right, we may not be these are the risks, may not be fully insured against certain things. Property, people could get injured. All right, here we go, properties. Yeah, baby, this is what we're kind of looking for. Corporate headquarters are located in Nevada, where they have a lease, whatever. Ace Cider in California. They have a winery, no tasting room, right? You got to go cider tasting. Believe me, I bet this will be a yes soon. They lease it. So they own this, right? BR Cone, wine, and olive oil. And they said they're not getting rid of that. So whatever. But this is 65 acres in Glen Ellen, California, right? So let's just try and take a peek here. Glen, this is where they are. I don't know if we can even Zillow this, but we can sure try and just see, like, I mean, they're not selling this, but just like, what's the general area look like in terms of property values, right? Oh, beautiful. Look at that, right by the highway. 3.9 million. I don't know. It's somewhere, it's Sonoma. I mean, this is great real estate. This is going to be expensive. 65 acres, I would imagine. 80 acre lot, 1.6 million. So maybe not, but it's going to, I guess, depend on what you can grow on it or whatnot. We'll get rid of this. We don't need to watch Cameron, but he's great. So they're keeping this one, right? Owned, keeping. Clos this thing they're keeping. Cosentino Winery. I don't remember reading about that. This is 2 acres in Yountville, which is some of the most expensive real estate, really, and probably it's not cheap. But I don't remember reading in this statement, right? Do you remember that other statement we were looking at, the news here, right? Restructuring. They don't want to tell you what they're selling, but they're not selling Cosentinos, right? They're selling, what's it called? Cosentinos Winery, right? If we go in back into where we were, not there, we'll look that up. Right in here, not the news release, but the right in here, right? They don't mention it. And so that totally could be, and then let's look at the brand portfolio, Cosentino Wines, Wine Club. Oh, fuck, I think I've been there. Yeah, I'm pretty sure. I think I've literally been here. That's ridiculous. But I don't think we even tried their wines when we were there. I think it was like trying other wines. Yeah, we did a tasting. I had a tasting here. That's ridiculous. Red wine. I don't know. So maybe they're selling this. I don't know why. It actually seems like a pretty decent sort of thing, but 2 acres. That's so little. It's just like a little land. St. Helena. Yeah, actually, I had a very nice time here. I remember. So I guess I've contributed to this company. But could get sold. This property, right? This is like right on that beautiful highway, right in Napa. If you haven't been to Napa, I'd recommend it. Just check it out. Just go check it out. What would this sell for? 7,415. See, it's not a lot of money. 2 million. But still. Oh, maybe they sell that. I think there's a beautiful up here. I remember looking at this house. Actually, when I was sitting there, I'd be like, I'd like to live there. Anyway, we don't need this anymore. We know they're buying a little bit. It's nice. Don't need this. We'll leave that open. So, Swanson tasting room. Right? These are some of the other properties. I don't know what else they'll sell. Owen Row in Washington, 340 acres. But I like, a lot of these are owned. So I don't know. It's tough. I'm not sure how to look at this and kind of parse out what the value of these things is to be sold. But I'm curious what the most valuable of them is. This looks nice. So are they selling this? I don't remember if this was, I feel like they said they might be keeping that. Let's take a look. So super premium estate brands include, Gerard, Kuhn. So they're keeping that. They like that one. That seems like a big brand. Jeez. Yeah. Oh yeah. I think I've seen this before. This looks really nice. Who is in here? Oh, like who's the other viewer? I don't know. I mean, I'm live. Could be anyone. But probably Jack. But probably not, actually. I love it. We just start cracking up ideas and trying things like this. Yeah, right. I don't know. So I just don't like it because I don't really know how to use YouTube. But so they're keeping this one, right? This isn't going anywhere. The question is, like, do they have anything good that they're not selling, right? And it seems like they're kind of Ace. They're keeping Cone. They're keeping a lot of these. This is just like office space, like leased owned. There's nothing in here that I'm like, oh, wow. All right, Mayors. What about that? 154,000 square feet. Why is this asterisk?
Oh, so this is wine and spirit production facilities. So I don't know if they mentioned this in this statement over here. They don't. So maybe they'll sell some of that, but I doubt it. They probably need that. Legal proceedings, right? Nothing there really there. So I'm kind of feel like this is a wait and see. Like they're supposed to have earnings soon. And so that's probably what we want to look at next and say, what kind of progress are they making on these things? The issue is usually when they tell you it's too late. So you kind of have to make your bet now if you think they're going to make the progress. Are they going to be able to sell something? I'm a little concerned about the size of this balance sheet. If we look at the assets, right? It's like not that much, 50 million in cash, 200 million in inventory, which is just wine, which may or may not be good, may or may not be able to be sold. So 265 million, 200 million in property, plant, and equipment. I mean, I'd like to see how is that recorded on here? That's what we wanted to look at. Right, maybe check a little note on that. So we're gonna see property, plant, and equipment. Business, won't even let me click down. Property, plant. We actually gotta go to the balance sheet for this. Here we go. Property, plant, and equipment. So we're kind of trying to figure out I don't know. Check the cash flow sheet here. Oh fuck, I didn't do my laundry. The other interesting thought is they may not just be selling the vineyard based on the real estate. They'll probably sell it based on the what multiple do vineyards sell at, right? Like, because that may be so. All right, I'm gonna sign off pretty soon. I think I tired myself out enough, but hard to say, right? It's definitely not a slam dunk. The thing is, what do they need to do to clean this up? Would love to see them shrink their inventory. And maybe sell some property.
and use the cash from those sales, right? Because actually, if you think about the inventory, this is money that's kind of tied up in the business. And if you could shrink this by 50 million, right? If it requires 50 million less cash to run your business, that's a good thing, considering the cost of this cash, which is all this shit, line of credit, right? They got a lot of debt. And so I'd like to see like total current liabilities to other. Let's take a look at the debt here. Just take a peek here. Where's the debt? This is the revenue, earnings per share. So restructuring. Yeah, this is kind of bullshit. I feel like everyone here knows each other forever and just sort of it's costing everyone money. But all right. This is pretty gross. Oh, God. It's pretty bad. So that's fine. This is kind of heinous. So warrants expire. We can revisit another day. You'll never catch up if I'm live and you're not skipping. This is kind of heinous. Well, I'm still going. I don't have like a final thought, but like I said, I don't think this is a slam dunk. The question now is more like with investing is tough because if we look at the stock, right, you can investing really is trying to find like a great company at a good price, right? Trying to say, is this going to become a great company? And I think it's probably not, right? And so the second way you can make money is if expectations change from really bad to just bad, or from really bad to meh. And when that happens, the stocks can go up a ton, right? You'll see that with businesses that look like they're going out of business one day and then they're not. Now they're up 50%. And so that's kind of what I'm trying to figure out here. Is this a business where expectations could go from this is really not looking good, right? They have a ton of debt and it's kind of a mess. And I'm looking at this, it's like all this other junk, to something that's like a little bit better and cleaner, right? Where it's like, okay, now it's only 5-10 brands and they're like doing well, making a little profit. Like, is that possible? Right? I'm gonna look up what you sent me, right? And if that was the case, if they sold all the crap and kept all the good stuff, maybe it'd be good. So PSG, I've actually been here, I guess. I've looked at their portfolio. Yeah, so these look like private companies to me.
So I don't think I can buy any of these, right? Because these are all, there's Hostaway. These are private businesses, right? So I can't buy the stock. I don't think. But yeah, I mean, this is a great place to look if you like a investment strat, like a company, you know, whatever these guys do. They're always looking for good operators in all their portfolio companies. So if you get to know the people here and you're good, maybe you can work at, you know, one of these places if they need someone with certain skills. It's incredible. Look at all these tech companies. Very cool. But yeah, BWE, I mean, I'm just still going through. But that's the kind of thing, you kind of keep an eye on it. I own a little, not much, but you keep going through. Immediate, you know, who are all these other people, right? Why are people who are family members getting paid lots of money? That's never usually good. It's kind of sick. Take yourself seriously a little bit. There's good reasons sometimes, but yeah, I don't know, maybe not. So here's a different segment. But yeah, you can read this stuff and kind of think about it. He likes, not loves the stock. Do I like the stock? I don't know if I like the stock. I don't love the company, but I think that's where being, you know, when you got to separate loving the business from loving the company. You can not like the company, but like the stock. That's sort of the lesson here is this can be a shitty company, but you can like the stock because of certain reasons, right? That's sort of what happened with the Real stock, right? This is not a great company, but today, right, expectations went from, oh, I don't know if they're going to be able to refinance their debt to they refinance their debt, and now that burden's gone. And that's the kind of gain you can make if you find it. So the question, and you know, maybe more, VWE, right? Could this go to $5 if they sell all the junk and are working 5 wine portfolios, making, you know, say they can make 10 million a year in like profit, right? And they're growing it, and you give that a 10x multiple, 15x. That's $150 million business, right? So that could 5, 6x. But how do they get there? What's the path look like? And that's where it's sort of, it's sort of tricky because of how much debt they have and just how much of a mess this is. Seems like kind of a family business, sort of like a lot of people close. I don't know. It's just so, I'd like to see like this. They got to clean this balance sheet up. 120 million owed, right? How do you pay off 120 million if you lose money every quarter, every year? It's hard, right? So you got to figure out, and how do you do it without selling the whole farm? So that's sort of what I'm trying to figure out. Shein IPO. I'm not familiar. Chinese company. Yeah, so it's not public. But I don't know. Would have to take a look at it. Chinese stuff kind of scares me, but you know, it's a clothing business, right? So it's going to have low margins, and they're just good at like making revenue. The question is, can they sell something that has better margins than cheap clothes? No, I know what it is. A fashion icon. But yeah, 90 billion. Oh my fucking God. Wouldn't touch that with a 10-foot pole, right? That's crazy. 90 billion. I don't know. Real. So yeah, I'm going to keep taking it. I'm trying to just figure out. I want to see them sell. I think that's the thing. We got to see them actually sell some properties and like get some cash. I think that would be very exciting, right? If they took 50 million and said, we're paying down our debt, that'd be exciting. But that's the problem. They need like a couple hundred, like 100 million would be nice, like big chunks, but it's going to be hard to do. Really hard to do. All right. That's going to wrap it up.
Thank you for joining the stream here. Hope everyone enjoyed it. Do about an hour and a half. Flew right by. So good night.